A 20-year-old college student made $110 million by selling all of his Bed Bath & Beyond stock, but he did so just before the retailer's stock price slumped 23% after its second biggest shareholder indicated plans to sell his entire holding. Jake Freeman, an applied mathematics and economics major at the University of Southern California, invested in nearly 5 million Bed Bath & Beyond shares at $5.50 a share in July, spending a total of $25 million with the help of a wealthy pharmaceutical investor uncle. As a result, he owned around 6% of one of America's largest retailers. He then roughly sold more than $130 million worth of stock on Tuesday, after the retailer's stock price surged to $27 a share. Freeman's sale was well-timed. Shares tumbled 35% on Thursday as meme stock billionaire investor Ryan Cohen exited the struggling home goods retailer by selling his 10% stake. Who is Ryan Cohen? Cohen, who was born in Montreal, co-founded Chewy about a decade ago and then sold it for $3.35 billion to rival PetSmart and a British private equity firm in 2017. In early 2021, there was a day trading mania gripped the country and retail traders fueled a run-up in the shares of GameStop and a handful of other firms. Cohen had taken a stake in GameStop and called for changes. He was appointed to the board and later became chairman. At the same time, he became a symbol in the ongoing mania, Robinhood traders David standing up to the Wall Street Goliaths. Since then, he's periodically fired off tweets, mixing mercurial messages with criticism of high-paid CEOs and Wall Street vultures only looking to make a buck, cementing his status among some retail investors. BBBY stock has skyrocketed this month amid revived interest in the struggling home furnishings retail chain. The gains accelerated Tuesday after GameStop chairman Ryan Cohen disclosed late Monday in federal filings that he owns call options on more than 1.6 million Bed Bath & Beyond shares, with deep out-of-the-money strike prices from 60 to 80. Encouraged by Cohen's actions, Reddit-dwelling traders sank money into Bed Bath & Beyond stock, and the stock skyrocketed by nearly 70% in intraday trading on Tuesday as a result of a massive short squeeze. BBBY stock finished that session up 29% in a volatile day. Shares ran up again the next day, hitting a 5-month high of 30 intraday before closing near session lows, but still up 12% to 23.08. But then, after market trading ended August 16, Cohen's RC Ventures filed its intention to sell all 9.45 million shares of its Bed Bath & Beyond stock. BBBY stock tumbled more than 20% on Thursday. On Thursday afternoon, SEC filings showed that RC Ventures had sold off all its BBBY shares Tuesday and Wednesday at prices between $18.65 to $29.22 per share. Cohen had purchased his Bed Bath & Beyond stocks on average for around $15.30 per share. Bed Bath & Beyond shares shed 40% to 11.13, dropping below its 200-day moving average early in Friday's market trading. The worst part for the Reddit crowd, it was Cohen's very involvement in the stock that fueled their enthusiasm. The price at one point this week more than quadrupled from a recent low in July, with at least some pointing to a disclosure that showed the GameStop Corporation chairman still was holding onto his stake, which at that point exceeded 10% of the firm. It included call options that would only be in the money if the stock continued to soar. A torrent of cash from retail traders pumped up Bed Bath & Beyond's shares in recent weeks, even with the company's financial situation deteriorating. They bought $58.2 million of the stock on Wednesday, a day after snapping up a record $73.2 million. Net purchases over 3 weeks totaled $229.1 million. On Monday, Yahoo Finance reported on signs of financial stress at Bed Bath & Beyond locations in New York and received colorful feedback from BBBY fans. On Tuesday, B. Riley slashed its rating to sell on Bed Bath & Beyond. Analysts said UBS and Wedbush also reiterated their sell ratings on the stock this week. But with Cohen now out of the picture, the market may turn back to focusing on Bed Bath & Beyond's bleak near-term outlook. After a failed push in 2021 and most of 2022 into stocking stores with private label goods no one had heard of while also closing stores and firing workers, Bed Bath & Beyond ended its most recent quarter with a little more than $100 million in cash, tanking sales, weak store traffic, and a badly damaged brand. There is currently an interim CEO running the business, which came about after the booting of former top Target exec Mark Tritton, and some observers are wondering whether vendors will continue to ship all of the merchandise that Bed Bath & Beyond needs for the holiday season amid the retailer's severely weakened financial state. The road ahead will be long and filled with a lot of challenges, UBS analyst Michael Lasser said on Yahoo Finance Live. If they do come out of this challenging situation, the business could look a lot different, probably would look smaller. Bed Bath & Beyond stock, is this meme stock a buy or a sell right now? Bed Bath & Beyond, BBBY, one of the original meme stocks along with GameStop, GME, and AMC Entertainment, AMC, spiked higher in early 2021 as Reddit and social media-fueled buying frenzies spurred tremendous short squeezes despite lousy company fundamentals. BBBY stock has skyrocketed this month amid revived interest in the struggling home furnishings retail chain. The soaring BBBY stock earlier in the week seemed to offer a high-risk, high-reward situation, which caught the attention of retail traders on Reddit's Wall Street Bets forum, the progenitor of risky meme stock trading. When a stock jumps that fast, it can be tempting to invest. However, given meme stocks' volatile track record and mostly lack of profit makes them an area to tread carefully, as demonstrated in Bed Bath & Beyond's case. Bed Bath & Beyond stock fundamentals. The New Jersey-based Bed Bath & Beyond has retail stores across the U.S. and specializes in home furnishings including bedding and bathroom accessories. However, like other retailers, the company has been hit by inflation and supply chain issues. Bed Bath & Beyond has had a string of quarterly losses, and last turned a profit in the second quarter of 2021. In Q1 2022, BBBY missed on Wall Street predictions. The company's EPS plummeted from 5 cents per share in Q1 2021 to a loss of 2.83 per share in 2022. Sales fell 26% to $1.4 billion in this year's first quarter, the fourth straight year-over-year decline. Interim CEO Sugov told investors at the end of June that steep inflation and fluctuations in purchasing patterns have hurt business. The simple reality, though, is that our first quarter's results are not up to our expectations, Grove said. Bed Bath & Beyond is due to report second quarter results in September. Analysts predict a loss of $1.59 per share and $1.5 billion in revenue, according to FactSet. Wall Street is projecting a loss of $6.22 per share for the full fiscal year on $6.5 billion in sales. Of course, meme stock investors look past a company's weak fundamentals. In fact, weak fundamentals and dubious prospects can be a plus, because that's a great environment for big short selling. BBBY stock a buy? Bed Bath & Beyond, like most meme stocks, has terrible fundamentals, with a series of losses and fast declining revenue. Technically, BBBY stock has been hot, but is greatly extended from moving averages and is now getting a lot of media attention. That's a sell signal, not a buying opportunity. A key catalyst for Bed Bath & Beyond's recent rise and sell-off was GameStop's Cohen. Bottom line, Bed Bath & Beyond stock is not a buy and flashed massive sell signals in the past couple of days. Any investors who own BBBY stock now should consider selling some or all of their position at current levels. Remember, this is not a financial advice, always do your due diligence before making a buy or sell decision. I wish you good luck, and why so serious?